All right. So you're welcome to the class tonight. All right. Okay. So basically, what I'll be talking about tonight is just candlestick anatomy, and I'm going to talk about few attributes of this asset. We already know them, but you know, we might not actually take cognizance of them. So basically, boom and crash. All right. So I'm just going to take my time to introduce the assets to you, and then we talk about candlestick anatomy. Most of the people here are bosses. I think they know them. Boss Moses know it. Mr. Emeka knows it. All right, so it's not something new to them. So it's fine. So, but for the sake of those that are new, all right, I have to start from there. I just have to start from there so that we can actually come up with something good during the course of the class. All right. So now, the introduction and candlestick anatomy for boom and crash basically is generally for all the assets. So it's the same for all of them. So we are not going to stay long. In the next 20-30 minutes, I should be done. All right. But introducing this asset to us, that's the boom and crash, they are just basically six. And I think they wanted to add maybe more like two of them. All right. I think crash, I can't remember, maybe 600, boom 600, crash 900, boom 900. It's not yet live, but I've seen it on TradingView. That's maybe some months ago, but yeah, it's no longer available. But I think they are working towards adding to crash and boom. But for now, we have crash 300, boom 300, boom 500, crash 500, boom 1000, and crash 1000. All right, all these assets are tradable. Okay, you can trade all of them, but you need to understand how they move and how volatile they are. For instance, the minimum lot size for boom 300 is one lot size. Previously, before now, when we started trading this asset, the minimum lot size was 0.1. But then I think they saw that people are using it to grow accounts. The lot size to about, let's move ourselves. Okay, so I think they now moved the lot size to one lot. All right. Now, currently, the leverage on this asset, the minimum amount you should have to trade boom 300 is $31. All right. Even if you don't have $31, you can't place any trade on it. So you have to just relax yourself. So the minimum you should have is $31, 31 point something. I can't remember, but it's 31 plus. All right. So if you want to place a trade on boom 300, you have to have that $31. All right. On crash 300 basically, and this boom 300 is not very volatile. Okay, so if you don't have enough, maybe you don't have up to like $150, I won't advise you to actually trade the asset. So you just have to stay. All right, wait on that asset. The second one is crash 300. Crash 300 is also volatile. The minimum lot size is 0.5. And I think to place a trade on that asset, you need like, it varies. Midnight now, you can get to midnight and then it's giving you 11 point something. You can get during the day, it's giving you 13 point something. You can just vary, all right? So, but the minimum you should have is about 15 thereabout, all right, to trade it. So if you want to place any trade on that asset, you have to have 15 minimum, all right? So that's that on that asset. It's a very good asset to trade anyway. I really, really like it. I focused on recently, all right? That's Crash 300 and is doing amazing things. So I'm just trying to introduce them to you one after the other. Every other boom and crash asset are just minimum lot size is 0.2. Boom 500, I think you need 3 point something dollar, all right, to place a trade on it. Just about $4. You need minimum of $4 to be able to place trade, or $3.3 to be able to place trade on it. But I realized that recently they reduced it. Now it's reduced to 2 point something, maybe 2.7 or so. So I think it varies over time. So that's what we have on this particular asset. C500, you can trade it with 2.3, all right, $2.3. Boom 1000, I think is 5.7, yeah, $5.7. And then Crash 1000, you can trade it with as low as $1.8, all right? So if you have 1.8 in your account, you should be able to take a trade on Crash 1000. Okay, so I think the part of me introducing this asset to you continues when I tell you that okay, this asset has two sides to it, right? There's the sweet side and there's the spike side, all right? So you can trade the tick, you can trade the spike. Basically, you don't have to be rigid to say it's only the spike that is more, more realistic and then more comfortable to trade. You should be able to master the asset to an extent where you can both take the spike and the tick. So that's the essence of trading any asset, all right? When you are trading which asset, you should be able to buy this asset. The same way with boom and crash. The only problem with this is that when you trade the tick is against the spike, all right? When you trade the tick, it does respect stop losses. What I'm trying to say in essence is this: when you plan in your mind that you want to risk $5 on a particular trade, and you use the loss size appropriate for that $5 risk, if it is against the spike, right, and actually spiked against you, you might be seeing, something much more than $5. All right. So that's just the difference when you are trading the tick and the spike. The spike will actually give you the accurate stop loss you use. That's if you want to catch a spike. So you are trading against the tick. So it naturally will give you your stop loss. If it's $5 you are risking, is okay. So the reason why people are afraid to actually sell boom and buy crash is because if it spike into your stop loss, it will actually take the full money of the spike. All right, it will take the whole full money of the spike. It will not say you risk $5 and then just stop at $5. So it will take the whole money and then give you the rest, but it will stop from there. But that last spike will take the whole money. That's just the difference between this and others. Is someone asking questions? Let's wait. The question time will come after you're done. All right. So don't stress yourself. The question time will come after it. Now, also, that's just part about the introduction. All right. That's part about the introduction. So let's just go to candlestick anatomy. Right. How I see
recording in.
All right. So how I see candlestick, I'm recording basically from here. All right. So we have bullish candles. All right. Bullish candles actually open at the low, all right, then push up, have a close, and then have the high, all right, possibly have the high somewhere around here. Let's say it has the high like this. Don't mind me. All right, so this, the candle, it has a high, and then it has a low. So this is a bullish candle. And naturally, if you open, maybe you just open your MetaTrader 5. Generally, bullish candles are always in green color, basically. Then the bearish candle are always in the red color. So bullish candle are the green, then bearish candle are oftentimes the red color, all right? The red colored candles. Now, how do we mark this? We have, where's my arrow to? All right, the candle opens around here. All right, so that's where the candle is. So it means it opened around here. then has to create a low, which is somewhere around here. Now, yeah, let me just, because of the diagram I'm marking, all right, so we have this low, and then it has to come and create a high, which is this week above the high of this week. So that's the high of the candle, and then it has to close somewhere, all right, so it closes at the body, all right, so that's the close of the candle. So these are just the basic 4 parameters of a candle, all right. A bullish candle opens below, all right, moves a little to the downside, then continue printing, creates a high, all right, this is the highest point of the candle, come back and close the candle, all right, as a body, all right. So this is the body of the candle, this is the high, and this is the low, all right. Just the general interpretation of the candle. If someone says something, please, if you are not talking to me, always try to mute yourself. This call is being recorded. I want it to be as clean as possible, please. So if you want to talk, we talk when I'm done. You ask your question when I'm done. So please mute yourself. Thank you. Yes. This is just that about this bullish candle, right? There are serious interpretations to it, but when you see it now, you know what you are looking at. So when you see a green candle, you know that the open is below, the low is this low, the high is above, and then the close is also above. All right, the body of the candle where it ended is where they call the close. All right, for a bearish candle, it opens from above, all right, then moves to the downside. Okay, now okay, so what happens is that now coming, you have a wick here which depicts the high of the candle, the low of the candle. All right, so we have the same illustration, which is now the candle opens here. Now that's the open of the candle. Now we have the close of the candle is below, all right, somewhere around here. So I don't want us to stay long on the call because after this class, we will decide when to do the next one. All right, so we have this low here. Yeah, that's the low of the candle, and then the candle high is still above. All right, so basically the major difference between this candle, the bullish and the bearish candle, is just the open and the close of the candle. All right, so the major difference is the open and the close of the candle. All right, so the candle closes above here, the candle opens above here, the candle opens below for a bullish candle, then the candle closes below on a bearish candle. But both of the highs and the lows are the same. So these are the candlestick representations of them. Now, you see, you can actually read where I put my low, and that's one of the things you have to pay attention to. Now, the low of the candle is not the close of the candle, all right? Because most persons actually, when they are, I don't know, whatever they want to do, some people will just mark somewhere around here and say, okay, a lot of things. This is just the close of the candle, all right, basically. So this is not the high of the candle. So if you want to consider all of the components of the candle makes it a Japanese candlestick, all right? Both the highs, the lows are relevant. For any candle, both the high and the low are also relevant. depending on how you want to do it. But for what I do here, both the highs and the lows of the candle are relevant for me. All right. So either I want to use it as a zone marking, anyone. For certain reasons, there must be a reason why I'm not marking it. All right. But they are very relevant when I want to actually talk about candlestick. All right. Another thing is this. I want you to just quickly understand the essence or the completeness of this candlestick pattern. So I'm going to make a sketch so that you can get something of. We will not just stop at just marking candle alone. I want to actually show us something. Now, for instance, just continuing with the candlestick anatomy, all right? If price is bullish, we are not talking about structure yet, but let's say price candlestick kept going up, all right? Let me not use this. Candlestick kept going up, all right? It kept creating bullish candle, all right? The way candlesticks are programmed, all right, it just have to keep going. All right. The moment another candle comes, and then probably with a wick or anything goes below the previous candle like this, even if it is with the wick alone, not even the body, all right? Let's say it's just the wick that happened to hit, all right? The wick happened to hit. All right. What we call this is also liquidity taking, all right? But then we'll get to all those parts yet. But under candlestick anatomy, this is not an orthodox way of candle printing. If this ever happens, all right, it means there are certain bodies in the market that allow for this to happen. Most of the time they call them, what do they even call them again? Market makers or something like that. But let's say this, let's be very realistic, all right? I will have to tell you this basically because most persons believe that someone under synthetic indices is placing a big lot, and that's why the asset is moving. These are algorithm-based assets, all right, instruments basically. All of them are algorithm-based. They are program written. If you like, use 500 lot size. It doesn't make the market move in any direction. What happened is the algorithm is written. So it's the algorithm that moves the market basically. So you can use any amount of lot size, it doesn't matter. All right. So your lot size doesn't move the market. What moves the market really on synthetic basis is the algorithm, the programming that happens. That's why you have almost every time the life will tell you they are maintaining. They send you messages, they are maintaining. They are just trying to adjust the program or give an update to the program they have before. So it's not like someone plays a big lot, and that's why the asset started flying. No way. The program that was written concerning it is programmed to move like that, and that's why basically studying the previous print of the asset can give you a knowledge of what you should do with the asset. So don't stress yourself, cracking your brain and say, some people are pushing the market down. Nobody, except you are joking. All right. If I ever tell you someone is pushing the market down on a synthetic instrument, it means I'm just actually playing with you or joking. But basically, synthetic indices or assets are moved by programs that are written. All right, programs that are written. So where they are such that they mimic real life occurrences. All right, they mimic real life occurrences, and that's why they've not tried to create an asset. So they now call them. I've forgotten how they put them, but they have currencies name. They have relatively close. You see, GBP, USD, I can't remember how they put the name, but they are just trying to tell you that these assets mimic real life assets. They just mimic them. And it was basically a program that was written just to mimic, the algorithm of a live chart, like all these GBP, USD. Those ones are moved by volume. All right. I'm not talking about our currencies here, but I'm just telling you the basic difference between them. So when you see candle prints and it looks long, 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 it means the program at that certain time tells that candle to actually move long. Okay, there are a lot of things that are there that I will not explain because I spoke to some, before I actually conclude to this, I spoke to some really, really great people that have worked with brokers, all right? Sorry. I have to talk to them, and then they are the one that told me that if it's synthetic indices, it's just basically program that runs it, algorithm robots. So those robots just prints and prints, and that's just what happens. But data are collected for currencies. Data are collected even before mathematical application. You see, a lot of things go wrong with currencies anyway, basically. So now, this is basically candlestick anatomy, and this is what I'll be using to explain. So if I say mark the candle's low, you know what the candle's low is. All right. It's not the body of the candle. All right. If I say the low must be taken, I'm telling you basically that if the low must be taken, I'm not talking about the body of the candle. I'm talking about the wick of the candle must actually be taken if the candle has a wick, because sometimes some candles do not have a wick. Now, you see, for a candle to be a complete candle, I have to say this. It has two. So you can listen to this. If you don't want to listen to it, you have to go and rewrite. You understand? Write it down so that you can be able to go through it again. For a candle to be complete, it has to have these 4 parameters. All right? It has to have a high, it has to have a close, it has to have an open, it has to have a low. That's a complete candle. For instance, if a candle doesn't have a high, let's say for instance, I remove this eye here, this wick, I remove it. So this candle only have an open that doubles as an high. All right. Sorry, are you following? If you are following, just drop 1 in the chat box, please. If you are getting what I'm saying, just drop 1 in the chat box. All right. So now, yeah, thank you. All right. So if a candle doesn't have a wick above, all right, and the open of this candle for a bullish candle doubles as its high, all right. For this scenario, if you see this scenario, just know that price has liquidity to be taken there. All right. That means there is liquidity to be taken above that candle. All these things, I might just be opening my mouth during the other classes to just say it. All right. You will not know why my limit is at that candle. The reason why my limit is above that candle is because the open of this candle also doubles as the high. So liquidity is here. So price will always come back to liquidate this place. All right. So it's basic knowledge. So when I see this kind of candle on higher time frame and my zone, my zone covers all, I will show you practically when we are going to the chart so that you can also see it yourself live. All right. As soon as I see this kind of scenario, if it's close to my zone, my limit will somehow be above this candle high. All right. Or this candle open. All right. Because it doubles as a high. So my limit will just be here because I know that price somehow we target that place as liquidity. All right. So that's mostly the way I get my sniper entries anyway. So that's just the secret. So someone has asked, how do I get my sniper entry and all? I always look for wickless candles like this because I know that price will always come for it. So I just put my limit there, no matter where my fib level is telling me to put it. So if I see these candles like this, I just put it there. I know that price is coming for it. So that is that. So I will be referring to this kind of scenario when we get to the chart or when we get to other courses. But for now, you have to understand these are the basics. All right. So if a candle doesn't have a wick, it means there's liquidity there. Let's say both ends doesn't have a wick. Both ends doesn't have a wick. Some people will say there's fair value gap there. Some people will call it any name. The basic thing is liquidity is on this candle complete. liquidity is on this candle. Both the highs, the low must be taken. All of this candle, yes, it must be taken. So there's full liquidity on this candle when it doesn't have a wick. All right. The wick is the line I drew above and below. So if it doesn't have a wick, it means that liquidity is too much. Money that came into this candle to make it get formed is heavy. So there are a lot of people that had to sacrifice a lot to make this candle get formed. So liquidity is there, money is many there. So, and that's why it's always my focus. Liquidity on both ends has to be taken. So, and that's that on candlestick anatomy. I think these are one of the most noticeable or notable things you need to know before we start talking about structure at all. All right, you need to know how candlesticks look. You need to know how candlestick form. You need to know when you see a particular candle, what it represents and what the major interpretation means. All right. So I'm not talking about single candle because some people here trade one candle. No, I don't trade one candle. Anyway, I'm not a scalper. I don't trade one candle. I trade a complete move. All right, a complete move. If it appears, I just take it. So, and that's how I trade, and it has been very good. And that's what I have brought you here to come and learn. All right. So, and for you to be able to do the way I do with boom and crash, you have to follow these particular steps. You can do whatever with VIX. I'm not talking about VIX, but if it's boom and crash and you appreciate what I've been doing with it and you actually want to do it the way I do it, this is just the way I do it. So these are just the way I look at all my candles. You will be surprised that I check every single candle on my move. All right. If the structure is formed, highs and lows, I check every single candle that formed that move. Within a glance, I just checked all of them and I know the simple interpretations attached to all the candles that were there. So you have to be able to do this. So I think for an introduction, this is a very good ground. I'm going to stop the class here. We are going to, after this class, we are going to just start with structure. This class doesn't have any assignment, all right? But from the next topic onward, we are going to be having an assignment. And we are going to be having a chat talk, basically. You will come. We will have corrections. You present your markups, all right? That's how it's going to work, all right? You present your markups. Yes, yeah, the class is recorded. All right, you present your markups and then you explain why, all right? So you explain why you have to mark, those kind of markups like that, all right? So it will help you grow. So you are not just depending on only me, you are growing by teaching others too. So you are going to do it. There's going to be a time for that. So if you don't want to be involved, it's fine. I won't force anybody to be involved, but you should try to be involved, especially in that particular aspect. All right, so I will stop talking too much here. If you have any question, you can unmute yourself and ask, please. I think, can we unmute ourselves? All right. So if you have any question, it's either you type it or you unmute yourself. Someone's network is bad. So yeah, I've read. Yes, so that's good. So if you understand all that I talked about, can you just drop fire emoji? All right, you understand everything. Drop fire emoji.
Hello, sir.
Yes, please.
Good evening, sir.
Yes.
Yeah. So I thank you for the opportunity. The wickless candle that you just explained, I don't know, I want to beg of you to throw more light on it. The wickless candle.
Wickless candle.
Yes, that you just explained.
All right. First, okay, let me just talk about it just a little bit more. All right. Wickless candles are signs of volume in the market. All right. It means there is something that happens around that place that caused that candle to form. It means that a volume came, someone dumped an high volume of amount of money. That's just what I want us to use to analyze it. Like I'm saying, I told you now that you see, is the currency knowledge that they brought into synthetic to create the program for synthetic that we now trade. All right. So in the currency term, it means that someone somewhere, used an outrageous lot size, maybe an institution or something, you create a volume to push the market down. Basically, I don't want to believe there are some things I don't believe in, but I have to use those terminologies to explain so that you can get it. All right. So when the volume comes in, there was a fight. And in both the seller and buyer side, the ones that win, if the candle is a bearish candle, it means in both sides, the sellers actually won. Now, the buyers will not also agree. Their target is to come and liquidate also the sellers that won them before. So their target is to always come back to that candle, especially if that candle is close to the beginning of a move. So they come to the side that doesn't have a wick, all right, to just balance price there. So the complete I will have to start searching it, but I will check it out. Wait, if all of you are patient, we have to go to the chat and look at it. But time is not on our side. I think I have 6 minutes more. So I will show you on the chat maybe quickly so that I will just go from it. So, but what it means is price, there was a volume around that place and there were a lot of liquidity. Liquidity means there are money there. Big money is lying inside that candle. So what they will do is, if you are so relaxed and you are the one that used that big money, they will give you good move. It will go very well in your direction because you are the one pumping it. But by the time you forget yourself there, they will now come back for you and then clear all the money you pump into it and then start going in your direction. So that's just the basic analogy for that wickless candle. So it's just, you have to understand what it means when you see it. All right. There is a class for this. Okay, the person that said, can we see an example of the wickless candle and how the liquidities are formed? I don't want to talk about liquidity. I don't want to jump. There's a time for liquidity. So if I start showing you that, I would have jumped a lot of things. And this is a video, I want it to be constructive. So I will not jump it. I will not jump to that. I can show you an example of a wickless candle on the chart, but I will not explain how the liquidity process actually happened. All right. I don't think I will do that. Not in this class. There is a class for liquidity, and then we will all see it when I'm trying to see it. For me, I'm coming. I wanted to show you. Now I've moved my distance. All right, let me just show you something around here. I wanted to pick the one that has both sides. This H4 time frame. Okay, this candle, there's a volume here, like this particular bearish candle. Okay, this is an example of a week. Let me see it very well because I'm not sure. Okay, I don't think it has any wick. So this is an example of that wickless candle. All right, this is just how it looks like. But how the process of liquidity happens, I'm going to show us when liquidity comes to play. But I don't think this one was taken, so you don't have to stress yourself. And secondly, okay, there are certain criteria. I don't want to jump. You just make me miss and lose focus of this class. So let's just wait. Let's be patient. All right. There are a lot of conditions you have to put in place. Okay. So price will always come for that candle. You can see the high of the candle was taken by this. Most people will think is equal highs, but it's not. All right. The high of this candle, when you check, I think the way this thing is showing, but I check on my phone. This was, you can check on your phone too. This was actually taken. All right, so my limit would have been on this high and I would have been activated. So this high was taken. All right, price will always come. The low was taken first by this move, and price after a very long time came back and took out the high. All right, price will always come back for the high. So I'm just showing you how the process. Now I've shown you how the process of liquidity happens here. So if you see a full candle without wick, it means there is liquidity at both ends. On this particular scenario, price came down, all right, clearing the first wickless low, all right, went down, and price now came back, after all these dance, this is how many hours later, and cleared the high of this candle, all right? It cleared it to this move and then started selling. So this is how I just get my sniper, all right? I just put my limit around here, price will come, tap into it straight, and then start falling. It's just like that. It's the same process over and over, all right? So, Mr. The person that asked the question, do you understand it? Do you see it now? No, I've already answered the question. Did you see it? Okay. So that's just how it is. So I've shown you, all right? It's part of the things I promised to show you. So now I'm showing you now. So you should just enjoy it. But there is a class where I've planned for that, but I just have to make sure you get the hint, all right? So even if it is only the high that doesn't have the wick, all right? If the high doesn't have the wick and it's close to the zone, price will still come for that high, all right? Price will always come for that high. Like, for instance, see this one here. See this candle here. This candle doesn't have wick above, all right? Let me zoom in so that you can see better. There's no wick above, all right? For a candle to be complete, it has to have both ends. It has to have a high, a low, a open, and a close, all right? This one particular hand has the high and the open of the candle at the same level. So there is liquidity there. So price will always come for it, and let's put it there. You see, this is the high. And price came for it. You see, price will always come for it. See it here. So you just have to pay attention to it. Yes, someone is saying something. Okay, I thought someone is saying something. Is there any other question, please? All right, so if there's no other question, I have less than 1 minute. So I'm going to send the video to the group so that anybody that needs it can have access to it.
I have a question, boss.
It's only 1 minute remaining. All right, be fast. Let me see.
Yeah, quick one. So if the top or the bottom of the candle has no wick,
yes,
so the market will come back for that top or bottom that has no wick.
Yes,
so
yes.
if it taps in there, will you have to reverse, or can it tap in there and then go past it? Or
yes,
does it have to reverse after tapping it?
Depending on the structure, all right? There are zones that you have to follow. That's why I'm telling you if it's close to the zone, all right?
Okay.
So when it's close to the zone, it helps you to be able to know where your entry will be. You understand?